Hey everybody, it's Eric. Welcome back to the channel. In yesterday's video, I talked a little bit about an Iron Condor setup I was looking at because the market is falling, volatility is rising, and we can get some pretty good credits for pretty wide spreads. So I was waiting a day to see what happened, and now it is Friday and we're selling off again. The VIX is up another 10%, so we're kind of starting to push higher. And I talked in that video a little bit about this previous spike. I'll put a link down there if you want to check that one out from yesterday. But what I did was I basically went out 2 weeks. Today is the November 7th, Friday, and I sold the November 21st Iron Condor. On the top side, I sold the 68.75, 68.85 call credit spread. And on the downside, I sold the 6,500, 64.90 put credit spread. I got a net credit. Here, let me show you what it looks like. I sold a couple of them. I got a net credit of $3.90. I also picked up some SSO shares because I am a degenerate dip buyer at the same time. But I sold these spreads for $3.90. And because it's a 10 wide spread on the wings, that makes my max loss about 610 on each side. Now, the goal here is of the $3.90, I'm looking to get 25 to 50% of that gain. If I can close this spread out for, let's loosely call it 250, somewhere in there, I'll buy it back. And then I would take that profit. From a management standpoint, if I need to manage the sides separately, the idea would be if we sell off all the way down here or something, maybe retest these lows, I still have room on the outside on the bottom, and I would probably just end up closing the call spread because it would be worth very little, and volatility would be spiking as well. So I would take the profit there and then look for a bounce if things get really crazy and it looks like we're going to break to new lows and break 6,500. I think that's a little excessive, but we'll see. Then I could simply sell a new call credit spread and take that credit and roll down the put to create a new Iron Condor and kind of a new range. Right now, I'm going to loosely call the range from 6,550 to the recent high 6,900 or so. And that's about where my strikes are. And so I'm pretty comfortable with this range. And just one more kind of anecdote here. The VIX is spiking today. And I think the spread that I talked about in yesterday's video was 300 points wide. And now this spread, which I think I was getting more credit, is actually 375 points wide. So that's just a little something of why you can get a wide spread. When volatility spikes, you can just get wider and wider, and you start to feel a bit more comfortable with a range like this. If the market starts to go back up, volatility is going to come down and the whole trade will do better. And I just don't think we're going to make new highs in the next 2 weeks. So I'd probably just hold it as long as I could. So that's what I got. Have a great weekend. We'll see you in the next one.